Hi everybody, it's Sarah. I hope you are well and enjoying this series of videos. So today's video, I'm going to talk to you a little bit about explaining the difference between gross income and net income to a landlord. So when you are sourcing rent to rent specifically, it's really important that we get that rent down as low as possible so that you are able to make the profits that you need to make. Now, obviously, we always want to be fair and we want to make sure that the offer we're making is not screwing every penny out the deal for us when we're leaving that person in a bad financial situation. That's not what we want to be doing at all. But what you do need to do is to make sure that everything kind of meets in the middle and that everyone's got a win out of the situation. So one of the tactics that I use is the gross versus net calculation. Now, you might have heard this being referred to by Justin as the yes machine. It's a series of questions that basically gives you access to a series of numbers that will allow you to then present your offer in a way that shows that you are actually leaving them better off. And the way that that works is we take, at the beginning, what we do is we ask that landlord what is their gross income. So let's just, for easy, simple maths, say it's £1,000 per month. That's the advertised rent. So that means that that's the gross rent that they're going to be getting when they actually rent that house out. That tenant's going to be paying that £1,000. That's their gross income. Now, you'll know, I know, they will also know that out of every gross income, you have operational costs of running your business. What that means is that out of that £1,000 per month, they will actually be spending that money to run that property and keep that property up and running and in condition and so on. So what your job is at this stage is to actually work through a series of questions up to find out what they are spending so that you can establish exactly how much money they're actually making net so that you can offer them more money than they're making now. So some of those questions include things like, how much money have you spent on the property in the last 12 months? On maintenance, for example, they might say to you, oh, I've spent £1,000 in the last 12 months, and you'd write that down. And you might ask questions like, who pays for the gas safety certificate? It's a legal requirement that a landlord does that, so they have to be paying for that somewhere. And you can say, do you pay that out of the rent that you get? Most of them say yes. You'd make a note of that. What would happen if you had a leaky tap? Who would deal with that? I'd send an engineer out. Okay, great. And what would that cost? X, Y, and Z. And you can ask them questions about things like their portable appliance testing, their electrical testing. You can ask them questions about their letting agent. So what are you paying your letting agent every month? 10% plus VAT, and you'd make a note of that. What you then need to do after you've gone through and found out all of their expenses, all of the operational costs of running that property, you can then say to them, well, did you know, Mr. Landlord, that out of your £12,000 gross per annum, which is £1,000 times 12 months. In the last 12 months, you've spent X, Y, and Z based on what you've told me. So did you know that last year, actually, your net income was around, I don't know, £700 per month? Most of them will say no to that question because they won't have looked at it like that. They generally just don't look at it like that. They see the £1,000, they see their outgoings, and they don't actually look at their net profits usually. So what you can then say is, well, if I can find a way to pay you more money than £700 a month, and I can absorb all that hard work and effort and hassle and all the headaches, would that be a benefit to you? Would that be of value to you? So there's no point in trying to negotiate a rent down from a gross rent to a lower figure when there's no science behind it. The only way you can put science behind it is by doing comparable between their gross income and their current net income, which will be lower. And then what you need to do is make your offer, structure your deal so that it fits above what they're making net. It'll never reach their gross because that's just not the way that the maths works. But what you can do as a rent-to-renter is you can structure a deal so that it comes in higher than the net income they're making today. Guys, I hope that's been really helpful, and make sure you join the Facebook group, make sure you get involved, and if you've got any other questions, you ping them into that group and we can answer them for you.